Hi, I'm Jason Wells, and this is Chris Niederhauser with Wells Realty and Law Groups, where we do what agents can't. And what we're talking today about in our question of the week is credit ramifications after short sale, after foreclosure, after a loan mod, after any of these distressed financial situations, a strategic walkaway even. So, Chris, what can you tell our viewers about their credit ramifications?
The credit consequences after foreclosure and short sale and even loan modification, because that's important to include in there. A lot of people don't think about loan modifications affecting their credit, but it really does, and it's the same as a short sale. So that's really quick, just explanation of the different categories. But in a foreclosure or short sale, what you need to think about your credit as is a long-term and short-term effects of the credit. So what happens is in a foreclosure, the long-term effects of a foreclosure are timelines on when you can buy like a house or have a business loan or something like that. Those are those long-term loans that you have with a bank. And so they look at long-term, what you've done over the long course of your credit history.
We're talking 10, 15 years.
Sure. So under a foreclosure, for being able to buy a house, and that's what most people are concerned about, when can I buy a house again? Under a foreclosure, there's programs that you can do where you can actually get there after about 3 years if everything lines up correctly.
Yeah.
Getting into the right program. You're going to have mortgage insurance that you're going to be paying. Usually it's like an FHA program, or there might be other ones that are available that we can help you with. But those would probably have bigger down payments that most people don't have.
Right.
For the majority of people, they're looking closer to 5 to 7 years because they're wanting to get a conventional loan where you have to put down 20% and then the loan will be for about 80% of the value of the house you're looking for. Those are the guidelines that most people quote and that you'll see online. But there are other programs. As you go to the short sale side of things, you're looking at 2 to 3 years. Most people, right at 2 years, they're going to be able to get into that loan and be able to buy again after a short sale. And that's kind of the timeline that we try to put our clients on, is 2 years after us, starting the representation, getting that short sale done, to getting them back into another house.
So if someone's gone through foreclosure, they're looking at anywhere from really 3 to 7 years, depending on their situation. Short sale,
There's a lot
2
of
to 3.
that go into it.
But what about their credit score?
That's where they're going to be basically the same. A foreclosure and a short sale are going to affect your credit the same, because your credit score, it reacts quickly to missed payments and things like that. It drops quickly. But the good thing is it reacts quickly to getting back and making those payments on time and starting to get your credit repaired and moving forward with your life that way. So basically the national averages are for a foreclosure, you're looking at about 100 to 150 point drop in your credit score. For a short sale, it's about 80 to 120. And that just depends on how many missed payments you have. There's a lot of factors. We try to do some strategic planning on how many missed payments you have in a short sale or a foreclosure. Generally, a foreclosure takes longer, and that's why it has a greater impact on your short-term credit.
Yeah. An important thing to know is even after you've gone through these, credit agencies are about 70% inaccurate after you've been through a foreclosure or a short sale. So even if you've already been through it, you need to pull your credit report and make sure that those home lines of credit or your mortgage are reporting correctly. Otherwise, your clocks are going to not have started ticking off yet.
We actually have another video on our site that you can look at. It's why an attorney is a good thing to have on your side in a buyer situation. So when you're looking to buy in the future, our group is really well positioned for that because of situations with your credit score that we can help with and get things to move forward a little bit better. If, for instance, the bank didn't report it correctly and it's stopping you from getting a loan in the future, we can help with those situations. We've actually got a success story below or on the website that you can go see that.
Yep. So if you have any questions about your credit or how you're going to be affected or how you can repair it, contact us on this page or by calling above. Remember, at Wells Realty and Law Groups, we do what agents can't.
Thanks.